We're going to be looking at mastering fundamental analysis. Okay, I pronounce your name well, Toichiro. Thank you. Thanks for that. Good afternoon, Mr. Garba Mukhtar. I believe more people will join us as we proceed in this session. So we're looking at mastering fundamental analysis. Now, so far, I believe by now, some of us must have been hearing about what trading is all about and three ways we analyze the market. We talk about technical, fundamental, and now we're looking at the fundamental analysis. Third analysis is actually sentiment analysis. But many times when we do our analysis session, morning, afternoon, we do start with the fundamental. Then we go to the charts. Anytime we're looking at the charts, that's basically technical analysis. But then when we're talking about fundamental events, sometimes we talk about data, economic data being released. But then we want to go deeply into what fundamental analysis is so that you can get a better understanding of how to trade using fundamental analysis. Good afternoon, Opolo Olawale. All right, so let's get started. So what is fundamental analysis? Fundamental analysis is one of the strategic ways of analyzing any of the financial markets, whether stock markets, commodity markets, or even the currency market, or even the cryptocurrency market. And it involves analyzing economic. Now, take note of the following. It involves analyzing economic, social, and political forces that may affect this market. That means that this market is largely moved by economic forces, social forces, and even political forces. Now, in the diagram at the right-hand side, you can see fundamental analysis and many other factors surrounding it. Now, we'll start with the political event. Now, fundamental analysis can often be, moved by political events. Political event like election, when there's election in the country. For example, when there was election in the country in the United States last year, I think October thereabout, it's a major pointer to where the next economy of the nation will go to. Every time a country wants to select a president, they have to make a choice, between two people, because eventually the election will point towards two major contestants. And then last year it was Donald Trump. Sorry, it was Donald Trump and Kamala Harris. And Donald Trump during campaign seemed to have an edge above Kamala in the sense that he promised in American people that if he became the president, he was going to make the cryptocurrency, the reserve currency of the US, making United States the crypto capital of the world. Not only the crypto capital of the world, also the artificial intelligence capital of the world. And you can see that after he took over of office, these two promises have been made, especially that of the cryptocurrency market. Now, the cryptocurrency market, we can't do without it. It's getting larger and larger by the day. That means more people can come into the crypto space in the US and can invest into that market. Now, the artificial intelligence market is growing by the day in the US, especially in the tech sector. The AI sector is actually a subset of the tech sector in the US. Just last week, Friday thereabouts, Donald Trump had a meeting with the 33 biggest tech companies in the US, which includes Meta, that's a company owned by Mark Zuckerberg, Tim Cook of Apple, Google, and many others. And these companies were pledging an investment to the tune, like Mark Zuckerberg was pledging an investment to the tune of $600 billion in the US economy between now and 2028. Now, that's a large investment, and that's all because Donald Trump came into power and is able to know how to manage, these big companies. So political event is one of the major indicators of where the economy of a country is going to. And that's why it's a major fundamental, that can be looked at under fundamental analysis to know where the market is going for the country. Other fundamental analysis pointer is the economic data. When we have economic data like we had in the US last Friday, that's a NFP, non-farm payroll. Non-farm payroll measures the number of people that are employed in the United States for a particular month. Now, US calls it non-farm payroll, other countries just call it employment change, unemployment rate. But whichever one, what matters is that we're looking at a data that can help to know whether the economic is growing or otherwise. And thirdly, we have global environment. This one talks about environmental changes that are global in nature and can affect the economy of countries. For example, the pandemic that took place in the year 2020, it was a global economic, event. Also, some countries do have earthquake, some do have typhoons, and many others. These are global environmental events that could affect the economy of a country. And also sometimes war could come under some of these headings also. When you have a war, the economy of a country could be affected. Then we look at interest rate. Interest rate is largely decided by the central bank, and the central bank is actually the major department in government that regulates the economy of the country. So interest rate is equally a major fundamental factor for any nation. And finally, we look at inflation. So these are the key things to look at when we're talking about fundamental analysis. Now, fundamental analysis helps to understand the socio-economic factors causing supply and demand imbalance in the market. And once you understand the fundamental reasons behind price movement, you will be able to strategically manage your trading activities for each profit. So as a trader, it's not just enough to say you know the chart. It's also good to have an understanding of the fundamentals. It makes you a balanced and much more mature trader when you can balance both the technical and the fundamental together to take trading positions. Fundamental event has great impact on our trades as it could make a stock, commodity, or currency stronger or weaker. So some fundamental events may make the currency stronger, while some may make it weaker. And we'll look at the impact of on the chart, the impact of some fundamental events in the past on our chart. But before we go into deep into that, let's quickly read this right up. We said that the effect of fundamental events could last for minutes, hours, days, weeks, or months, depending on its significance. Now, what are we saying here? What we're saying here is that there are some fundamental events when they are released. They may just have effect on the market for just a few seconds, a few minutes, a few hours. So the length of time the effect of an event lasts depends on the significance of that event. Not all fundamental events are equally of large significance. Some, the level of significance is not so much, and as such, within a short while, the effect of that news will just wear out in the market. However, there are some events that the effect can span for days, weeks, months, or sometimes it could take years. Also, we say that the effect of such news could result in trend continuity or reversal on a chart. Now, what that means is this: there are some events when they're released. If they come out in line with the current trend of the market, it will lead to trend continuity. For example, if the market is already in a bullish trend and a news is released or a global event happens, which is in the same direction as the overall trend of the market at that point in time, then it means that that fundamental event will push the price, into its original trend. This is what I'm saying. Let's assume the market is already in an uptrend and the news is released and the news comes out in the same direction, then price will be pushed higher. So that is trend continuity. On the other hand, it's possible the market is in an uptrend and the news is released or an event happens and that event takes the market downtrend. So in that case, if there was already a running bullish trade and the market reversed bearish, that could actually lead to a loss. And that brings us to one important factor about fundamental analysis, that fundamentals can actually override technicals. And I want you to take note of that. Fundamentals can override technical. All right, we'll look at examples. Now, on the screen you can see a chart here, and it says in 2020, oil price dropped as a result of a collapse in discussion between OPEC and Russia over proposed oil production cuts amidst the COVID-19 pandemic. This made oil to fall from $48 per barrel to $7 per barrel in a space of 1 month. Now, this is a massive drop in the price of crude oil at that point in time. You can see it right here. That was a sharp drop in the price of crude oil due to the fact that there was a halt in discussion between OPEC and Russia, and that led to that massive cut in the price of crude oil. An example again here is in March 2020, there was a great increase in the cases of COVID-19 in Europe. And DAX, which is a German index, fell by 1,464 pips in 2 days. Now, sometimes the volatility released during fundamentals can be massive. Sometimes it may even be more than what you see on technicals, and that's why fundamentals can provide a lot of opportunities, for traders, especially if you know how to take advantage of such massive move in the market. Imagine having a massive move of 1,464 pips in 2 days. If that individual is trading, even on 0.01 lot, that will have given $146 within 2 days. If it's on 0.1 lot, that will have given 1,464 pips. That is well over 2 million naira thereabout. And if you're trading on one standard lot, 1,464 pips will have given $14,640. That's over 20 billion naira. I tell you, the potential is actually huge on fundamentals if you know how to take advantage of it. Now, I want to look briefly at some fundamental events that are tradable. Some of them will trade them live at PU Prime, and I'll let you know the specific ones. And the first one here is the non-farm payroll, NFP slash non-farm employment change. Now, this report is a key economic indicator for the United States. It is intended to represent the total number of paid workers in the US. NFP is change in the number of employed people during the previous month, excluding the farming industry. So, in essence, this data is released every first Friday of a new month. So, what we're saying here is that this data non-farm is actually the biggest news, is the biggest fundamental event in the forex market globally. Everybody watches, they wait and watch out for this event every single month. Now, the last data was released last week, Friday, and there was a massive move in the market due to the release of this data. So we say that this data is a change in the number of employed people during the previous month, excluding the farming industry, meaning that it's a data that comprises of everyone that is employed in the United States in the past month, excluding those in the farming industry, excluding the farmers. So NFP is a major economic indicator because it helps us know the level of employment in the US. And for an economy that is growing, employment is a key economic indicator. The next one we want to look at is called the crude oil inventory. And this is an inventory report that measures the change in the number of barrels of crude oil held by commercial firms. And these reports are published weekly on Wednesday specifically. And this report has more effect on the Canadian dollar because of its large energy sector. And the aim of this inventory is to measure the imbalance between supply and demand of oil. So if you're there, you want to start trading crude oil. There are some people that eventually specialize possibly in trading crude oil or gold or other assets. If you want to trade crude oil, then this crude oil inventory is a report you need to pay a lot of attention to. Thirdly, we have the Consumer Price Index, CPI. This data is released monthly from different countries. This data measures the price of goods and services. It gives us an objective view on how price is increasing or decreasing. CPI affects monetary policy decisions directly. Hence, its report has a significant impact on prices. So CPI is just helping us to know whether the price of goods and services is increasing or decreasing. It measures the difference. Maybe you took transport at 1,000 naira, from one location to the other in the month of July. Then August, has it increased or has it reduced? So that's just what this data measures. So it said it gives us an objective view on how price is increasing or decreasing, and it's one of the major economic indicators, in the financial market. Now at PU Prime, both NFP and CPI, we do have live trading session for these two events monthly. Last week, Friday, like I mentioned, we had a live trading event for NFP, and tomorrow we are having a live trading event for CPI. So if you're on the platform this afternoon, don't miss the CPI live trading session tomorrow. The link has been dropped in all our groups. Tomorrow, just click on that link, go straight to the live, to the Zoom, to the room where we'll be having a live session, and join us. But then make sure you have a live and a funded account to be a part of that live trading session tomorrow. So at the live trading session, basically what we'll be doing is that we'll analyze the market before the release of the data. Then we'll give you a signal, entry price, take profit, stop loss. Very important. We guide you. So you follow our lead to trade. And I tell you, we've had over 80% win rate doing this at PU Prime. So they're safe hands. Just join us the funded account tomorrow to be a part of this live trading session. Next is official bank rates. This is when central banks of major economies around the world release the minute of the meeting deciding the bank rates. Examples of this economy include the Federal Reserve. Now, USA does not call their central bank, they call it the Federal Reserve. Then we have the ECB, which is the European Central Bank, the BOC, which is the Bank of Canada, the BOE, which is the Bank of England, the BOJ, which is a Bank of Japan. So official bank rates is a major event also, that is always released. Now it comes under different headings from different countries. Some call it bank rates, some call it cash rate. United States calls it FOMC, Federal Open Market Committee. That's a committee within the Fed, that's the Federal Reserve, that determines whether there's going to be an increase in interest rates or not. So you can take note of that. Now, we also have the gross domestic product, which is the GDP. Now, this data is published quarterly and is the widest measure of the overall health of the economy. GDP is a measure used to confirm whether the economy is expanding, that is economic growth, or contracting, that is recession. The technical definition of recession is 2 consecutive quarters of negative GDP, and recession ends as soon as we see a quarter of positive GDP. So GDP is a major indicator of economic growth or otherwise. Also, we have press statements. These are speeches that are released by the central bank governor or members of the team of the central bank governor. Now, they do have a lot of impact in the market. Though many times trading it can be a bit dicey, because the best way to trade them is if you're able to watch the news where the statement will be made. Otherwise it can become a little bit tricky to trade. So press statement is also important. And we have other events like trade balance, producer price index, which is PPI, services PMI, and the manufacturing PMI. Now, this is just to give us a theoretical foundation of what fundamental analysis is all about. Now, I'm going to take us to forexfactory.com. That's a website that we use in trading the news. So I'm going to switch over right now to forexfactory.com, and I'll walk you through how we use this website. All right, so I believe I'll switch over to Forex Factory. I believe you are seeing Forex Factory right now, but I need a confirmation from you. So if you're there, you're seeing my Forex Factory, just hit the yes button so that I'll be sure that you can see my Forex Factory page. All right, thank you, Mr. Francis. Thank you, Tomewa Adeleke. I need one more response, feedback rather. I need one more feedback. All right, thank you, Okbolua Kolawole, Mr. Malik, Stanley, Adebanji. Thanks for the feedback. Okay, so now you can see I'm on forexfactory.com. Now, you come up to your website, you can see my browser. You type Forex and Factory together. Now, this website is one of the oldest and one of the most visited websites globally in the Forex market space. I tell you, this website receives hundreds of millions of views every single day, of traders around the world. And basically what they're checking out is the time when fundamental events will be released. Now, if you are opening this page for the first time, and as a global site, and as such, there is a time zone app on it, which can help you to regulate it to your current time zone. I don't know where you're watching me from. I'm in Lagos, Nigeria. So if you're in different country around the world, then the time zone will be different. And as such, you need to put your time zone to the same time zone that your device that you're watching from, which could be your phone or your laptop, is working with. So if you want to change the time zone, you come here to the upper part. Okay, let me use another color pencil. Let me use color red. Now, if you look up here, I just circled the clock over there. Also, there is another clock here. You can click any of the two. Any one of the two is fine. So I prefer the one up here. So I'll click it. Okay, now it's showing 10. You can see my time is showing 10:38 a.m. That means I've not refreshed this page since morning. So I'll click on the refresh button now and it's going to refresh. Currently, it's showing 4:25 p.m. and that's my local time as at this moment that I'm speaking. Okay, so I'll click on the time zone to, I'll click on it. You can see, or I can see the time zone is showing GMT plus 01 West Central Africa. Now, if your time is not showing this and you're based in Nigeria, then there's no cause for alarm. Just come to the drop-down menu and scroll till you see GMT plus 01 West Central Africa. Now, if you're watching from outside Nigeria and your time zone is completely different, then you need to click the drop-down menu and select the time zone of the country where you are based at the moment. So why are we doing this? So that you don't end up missing any of this news when they are being released. So we're regulating the time to our current time zone so we don't miss out on the time. Because if you don't do that, imagine the news have been released maybe 4 p.m. or 5 p.m. Nigerian time, and your own time zone is showing plus, GMT plus 5. Definitely you're going to miss out on it. So just to make sure you regulate it to your current time zone. And if you have done that, just click on Save Settings. And after that, everything is fine. All right. So the next thing we're going to do now, I'll walk you through just simply how to use this site. All right. Now, the first column here is showing dates. This will show, you can see that the main date is actually today, which is September 10. So that's very correct because today is September 10th. So here you see the date, which is showing Wednesday, September 10th. Then you see the time. Currently, the time is 4:25 p.m. But then the other time you see here will be the time, the specific time when the news event will be released. Like earlier today at 2:30 a.m. in the morning, the CNY data was released. This afternoon by 12:45 p.m., the CHF news was released. And by 1:30 p.m., the USD core PPI and PPI were both released. Now, if there's any other event today, you can see that the ones that I circled or the ones I marked, they are highlighted, it's like it's in ash color. If it's an event that is yet to be released, it will be in black color, showing you that it is yet to be released. But the one that has been released, they make sure it's in ash color so that you know that that is a data that has already been released. Now, the next column is a currency column. The currency designated the country, that we're trading the data, on whose data rather we're trading. So here you can see the currency CNY. Here we have the CHF, we have the USD. That's for the United States of America. Then the third one here is the impact. The impact. Now, like I said, all fundamental events don't have the same level of volatility or impact. Some are very strong, while some can be very weak. So the impact will help us to know how important that event is and what to expect, whether it's going to be very volatile or not so volatile. Now, before I proceed on this, there are actually three types of impact, but you can see the envelope for just two. I'll bring out the third one. I'll click this filter and I will check this yellow box here and I'll click apply filter. All right. So here you can see there is the yellow box here, the orange and the red. So the yellow box signifies medium impact event. Sorry, pardon me. The yellow box signifies low impact event. Low impact in the sense that no serious volatility is expected on this event. In fact, I would say they are as good as non-tradable events. Then the next one is the medium impact. That's the orange box is indicating medium impact. And the third one is the red, which is showing high impact. Like I said again, for emphasis, the yellow is low impact, not tradable. You don't expect any serious volatility from it. The medium impact is slightly volatile. Anytime you see this kind of data, the market may move from 10, 15 pips, 20 pips sometimes. But the most important is actually the high impact. The high impact can move the market 30 pips, 50 pips, 100 pips or more, depending on the type of news. It's not really all high impact news that can move the market 100 pips. It all depends. But at least when you see a high impact, news, you know that some measure of volatility will take place in the market when it is released. Now, next, we go to the news itself, the data itself. Here, I will use the event for today. You can see here CPI yearly, PPI, YY. The YY there signifies the yearly reports. But then let's focus on the United States core PPI and PPI. Now, some of these events, you really may not know what it's all about until you dig a little further. And Forex Factory has made it a lot easy. Anybody can use this website. You don't need to know Forex so deep. When you just follow the simple things I'm showing you, you discover that you can use this website effectively. Now, core PPI, you don't know what it means. So what do? You come to the next column labeled detail, and you click on the envelope that is designated for the core PPI. So you click on it, and the details of the information you need about core PPI, will be shown right below. So it says, now let's look at it. The source. What is the source of this data? The source is the Bureau of Labor Statistics. So this is a federal government website. It's not just a random website because source of information really matters. So it's not just one random blogger that is posting this. It's the government website for the Department for the Bureau of Labor, which in Nigeria we call Ministry of Labor. So it's a federal government website from the United States. Now measure. What does this news measure? This data measures the change in the price of finished goods and services sold by producers, excluding food and energy. And what is the usual effect of this event? Actual greater than forecast is good for the currency. All right, so it says actual greater than forecast is good for the currency. So those are the important things to note about this event: the source, what it measures, and the usual effect. In fact, the most important of it all is actually the usual effect. Actual greater than forecast is good for the currency. Now, I'll still explain in details what this actual greater than forecast means. Now, the next thing you now do is you come to the other column here, which is the actual. Now, what is the actual? You can say actual, you can say forecast, you can say previous. What does this mean? Now, the previous talks about the last time the data was released, probably last month. Any previous time when the data was released is referred to as previous. What is forecast? Forecast is telling us that between the last time when the data was released and the next time it will be released, has there been any government policy that supports this data, to either make the data get better or is it going to get worse? So that is a forecast. That is what the forecast is all about. It's talking about what analysts believe about that particular event, whether the next data will be better or whether it will be poor. So forecast is given by analysts. And then now we now have the actual. The actual now talks about the date when the data is released on the into the global market space, like the PPI was released today by 1:30 p.m. Now, as at early this morning, there was no data here because the data was yet to be released. But then after when it has been released, you'll find it, all right here on the Forex Factory website. So how do you use this data to trade the market? Now, this is the usual effect. If the actual, this actual, let me use another color this time. If the actual is greater than the forecast, then it means the currency will go bullish. If the actual is less than the forecast, then it means the currency will go in a bearish direction. All right. So let's look at this. Now, the actual is minus 0.1%. The forecast is 0.3%. That tells us that the actual is less than the forecast. That means we expected the dollar to go bearish. And the two events were released at the same time, core PPI and PPI. Second also, minus 0.1% is the actual, the forecast also 0.3%. So that tells us that we expected the dollar to go bearish after the release of this data. So I'll flip over now to MetaTrader and we'll quickly confirm this. All right, so this afternoon, 1:30 p.m., the data was released for PPI and core PPI. Let's check out the market reaction. Let's check out the dollar index, the USDX. Okay, so we'll go to the 30 minutes time frame. 1:30 p.m. this afternoon. Okay, we can see there was a sharp drop. All right, this is it. It's better captured right here. There was a massive sharp drop exactly 1:30 p.m. because the data came out as actual less than forecast. Now, it now depends on the kind of news. Now, this drop is enough to make a massive profit depending on your trading style and your lot size you're using in trading. This is 46 pip drop, the moment that data was released, because they were both actual less than forecast. Though instantly after, in the same less than 30 minutes, price actually reversed back up. But usually news trading is just sometimes a few seconds. If you've joined some of our live session, you understand what I'm saying. Exactly. This is it. This is it. This is 5:30. Okay, sorry, 1:30. Within 5 minutes, after 5 minutes, the market decided to reverse. But at the moment the data was released and it came out bad, we can see a sharp drop in 5 minutes. That's more than enough. That's more than enough. Imagine someone took this trade with about 0.1 lot and is able to capture, even if it's 30 pips, 30 pips, $30. That's good money if you live in Nigeria, because $30, if you convert that to Naira, that is well over 50,000 Naira just, following that. What I'm showing you right now is a strategy we can use in trading. Actual less than forecast means we're selling. Let me go back to the to Forex Factory. Now, if on the other hand it was actual greater than forecast, then we could have been buying. Now, Forex Factory has also made it a lot easy to trade this news event, by us looking at the color. If it is actual less than forecast, the color will be red. If it is actual greater than forecast, the color will be green. So actual less than greater than forecast, you buy. Actual less than forecast, you sell. Now, there's also a scenario where actual may be equal to the forecast. And that is where we have the color black, when the actual is equal to forecast. Usually I advise people to stay out when you have such a scenario. All right, so that's going to be the end of this training this afternoon. It's question time. If you have a question, go ahead and post it, and I'll attend to you. Definitely, Tony, you get the recorded version. Okay, Michael, this is forexfactory.com. I'll type it in the comment section. You're welcome, Mr. Tony. All right, so we've come to the end of this class this afternoon. I'll drop the link to the recorded version. Make sure you watch it over and over again. Then you discover that when we're having an analysis session, it becomes clearer. You understand things better. That's we do. All right, take care and enjoy the rest of the day. Bye bye.